Hi, I'm Bill Bradley. Join me for a recent excerpt of American Voices. Who taught you how to stay on budget? Who taught you about managing your credit card bills and how to stay out of debt? Or perhaps a better question would be, did anyone teach you about money? Or did you have to learn it yourself the hard way? My guest today is former head of the FDIC. She was an assistant secretary of financial institutions at the U.S. Department of Treasury. And when she realized that there is often a lack of financial education in this country, she decided to write books for kids, picture books, teaching them about money. Her characters, like Princess Persephone and Billy the borrowing blue-footed booby, make big yet common money mistakes, but they learn from them. Titles include Shark Scam, Daisy Bubble, Rock Brock Savings Shock, and Princess Persephone and the Money Wizards.
So you need to have a hard conversation with yourself. What do I really need to spend money on? So, okay, what's the example of a one? Anybody want a little boy in the gray shirt? Toys, generally, right? Dancing, like dance lessons, you mean, and stuff. Yeah, that's probably a one. Video games. Yeah, young people especially spend a lot of money on video games. Yeah.
Not only are these books helping kids, but they often help the parents, too. Sheila Bair is here with me now. Sheila, welcome to American Voices.
Thanks for having me, Bill. Really happy to be here.
So tell me, as a kid, were you always interested in money and banking?
No, actually, I wasn't. I think my first experience or first vivid memory about money was when I went to the bank with my dad. Friday afternoon, he was making a deposit. This is many, many years ago. I was small, and I noticed that the bank's vault was open. I'd always been fascinated by this big vault at our local bank. So I saw the door ajar, and I snuck over there to peek in. And I was quite alarmed to see just a bunch of little gold boxes. I didn't see any money at all. So I came running out quite loudly saying, "There's no money in the bank, Dad. There's no money in the bank." And the bank president actually rushed out and assured me that the money was safe, and then explained. I got my first Jimmy Stewart lesson about banking, that you leave some of the money in the bank where you can get it to it, but a lot of it is also lent to other families to buy homes, start businesses, etc. So yes, that was my first encounter with fractional reserve banking. I was probably about 6 or 7.
That's amazing how appealing that vault was,
Yeah, it was, exactly. It was shiny.
When I was a kid in Missouri in a small town, my father was the local banker. I was the janitor when the janitor would go on vacation, and I'd be there when the vault was open. And I'd look in the vault and be this incredible place of mystery.
That's right. Well, they did have a little cash in there too. It was back behind where nobody could see it. I
never saw any cash, but I do remember those boxes.
Yeah, exactly. So I was really, though, I kind of disdained money. I was when I was a young adult, I went to college and then law school. I wanted to be a civil rights lawyer. I was a civil rights lawyer for a time, and I wanted to fight against discrimination and for social equity. And I kind of thought money was beneath me, right? Who wants to learn about money? I don't want to care about that. And I found myself getting in trouble pretty quickly with credit card debt in particular.
Right. Well, you got credit card debt because of going to law school. What happened? How did you fix it?
Well, actually, I hadn't. I got through law school without having to borrow. I went to public university, Kansas University. I think, maybe the tuition was like $1,600 a year or something, quite low compared to today's very high nosebleed tuition prices. My downfall was when I graduated, I didn't have any clothes. I didn't have any furniture. I was starting my career. I needed work clothes. I had a new apartment. I had no furniture. And I was getting all these credit card offers, MasterCard. I remember these ads, MasterCard and me, MasterCard, it will empower you, give you power. And it was very focused on young professional women. So I went out, I got several cards. They kept sending me offers in the mail. Somebody found out I actually had a pretty good paying job. So I racked up that debt, and I got my first bills, and wow, I don't have to pay that much. Hit the minimum payment. Okay, this is all they want me to pay. That's all I'll pay. And I didn't understand about interest on balances, compounding interest, daily compounding interest on credit card debt. Yeah, I ended up spending several thousand
Yeah.
dollars.
Explain that. Explain that a little bit.
Yeah. Well, it's still commonly misunderstood. When you get your credit card, if credit cards are a great deal, if you pay it off every month, right? It's an interest-free loan for that monthly payment cycle that you're in. Pay it off in full every month, and you are fine. If you carry that balance, so you're going to carry a very, very high percentage rate. I mean, some cards are upper 20s, low 30s now, given where interest rates are and depending on your credit worthiness. And there's something called compounding. So every day you don't pay that debt, interest gets added to that debt, and then you start paying interest on that bigger amount because it reflects the interest that's already been added. So, and this happens daily with a credit card. So the interest expenses can grow really significantly over a fairly short period of time. And credit card companies only require that you pay a very small minimum, what they call the minimum balance, the minimum payment on your debt. So they kind of want you to carry that balance because that's how they make money. But if you only pay that, you're going to be everything you don't pay that month is going to be carried over to the next month, and you're going to be paying a lot of interest on it. So this illustrates the issue of compounding interest and how it really hurts you. Compounding interest will help you if you save. It will really hurt you if you borrow. And that's a central theme for a couple of my books.
So your message is don't do the minimum payment.
Pay it off every month. Do not borrow on your credit card more than you can pay off at the end of the month and then pay it off. That's right. Carrying credit card balances, families spend thousands of dollars a year on credit card interest. And it breaks my heart because if that money was put into a savings account or retirement account, they could be earning money. Instead of paying money, they could be earning money on it.
I think that if nothing else happens in the program, you've just given the listeners the wisdom of the ages.
I hope so. Well, compounding interest, I think Albert Einstein said, it was like the eighth wonder of the world. Those who understand it benefit from it. Those who don't understand it pay it.
So you wanted to be a civil rights lawyer.
I did, yeah.
But then you go into finance.
I did.
How did that happen?
Well, it was actually through my boss and mentor, Senator Bob Dole, and someone you knew well and befriended as
good
well.
Friend. Really great senator.
He was wonderful. I still miss him. I wish he was still here with us, helping us, with his statesmanship and his public service commitment. But anyway, I was working as a civil rights attorney for originally the Department of Health, Education, and Welfare that then became the Department of Education, given my work. And he asked me to join his Judiciary Committee staff because the Voting Rights Act extension was coming up. The Senate, as you recall, this was 1981, the Senate had just flipped Republican after something like 40 years, the Republicans had been in the minority. The Voting Rights Act extension was coming up, and there was a lot of anxiety about whether Republicans would support extension. Strom Thurmond was going to be chairing the Judiciary Committee, quite a change from Ted Kennedy before. And so he wanted to play a central role. And I think Senator Thurmond wanted him to play a central role because I think Senator Thurmond understood the perception of him as someone who did not support civil rights. So he needed a staff person to handle this. And there I was, good Kansas Republican family. And I was a civil rights lawyer. So that was how I got started. And then I worked for him for many years. And then I worked on his 1988 presidential campaign. And as you'll recall, we had an 1987 market crash. That was quite a big issue among many in the presidential race. And I got to know people in finance at the New York Stock Exchange, actually, through my work on his campaign as his policy director. So that's a long answer to how I got interested in stock markets. And after the campaign was over, I made a career shift and worked for the New York Stock Exchange for several years.
That's amazing. That just shows you when you remain open to new things, you learn.
You do. And so many kids ask me for career advice, and I tell them, don't try to pre-program your career. Understand the kind of jobs that will make you happy. Work for places that you believe in, that you don't feel compromised in any way, obviously. But make sure they're within your ethical compass, your moral compass, but, be open-minded because you just never know the opportunities that may present themselves, and you'll miss those opportunities if you try to pre-program what you want to do with your life.
So you go into finance, and what is your first job in finance?
So I started off as a legislative counsel to the New York Stock Exchange. I handled derivatives issues for them. That was back with stock index futures had just started, and there were a lot of issues about the regulation of stock index futures and their relationship to the stock market itself. I worked on those issues, and then in 1990, I stayed there for a couple of years, and then in 1990, Senator Dole encouraged me to go back home and run for Congress, which I did, and I ran a very good campaign. I lost by less than 1% of the vote, so that was a heartbreaker. But my campaign was noticed by George H.W. Bush, and they offered to appoint me to the CFTC. And that was my first job as a financial regulator, the Commodities Futures Trading Commission, which regulated derivatives markets. And then I went back to the stock exchange for a while, and then the Bush II administration asked me to become the Assistant Secretary for Financial Institutions, which I did, and then later became chair of the FDIC.
And so tell everybody, what does the FDIC do?
The Federal Deposit Insurance Corporation is a very important function for families. That agency that I was proud to lead for many years and it steered it through the great financial crisis. It protects your money up to $250,000. Banks are not perfect. Sometimes they make mistakes with people's money. They fail. And when they fail, the FDIC comes in and makes sure everybody has access to their insured deposits. So it's really important to stay below those insured deposit limits. You'll always be protected if you are below those limits. A perfect 90-year record at the FDIC of protecting people's money. I think there's a lot of confidence in it. It certainly was true during the great financial crisis back in 2008 and 2009. Where we gave a lot of people solace. We actually saw runs going into the bank because people had so much confidence in FDIC insurance.
Putting money in.
Yeah, they were. That was the opposite
That's
of what used to
interesting.
happen before the FDIC was created. So yes, uninsured deposits can be unstable, as you might imagine, because people get worried in times of economic turmoil. But for insured deposits, actually money goes into banks. But I'm glad I did it.
I mean, you performed absolutely superbly as the head of the FDIC, and you saved a lot of people in the country, I believe.
We did. They were so scared, and it was the people who had these terrible mortgages. We tried our best to try to pursue policies that would preserve home ownership for people who were in trouble on their mortgage. Save some, didn't save others, but also just making sure that money they had in that bank stayed there. And not only was there, but it was protected, it was accessible to them. That's so important for a deposit insurance program, not only to protect the money, but to make sure people can have pretty much seamless access to it. Because think about it, the money you have in the bank, especially your checking account, you're making payments all the time out of that. You're paying for your groceries, your medical bills, your rent or your mortgage. You've got to have continuous access to that money. And it's a very, very important function for a deposit insurer to make sure that access is seamless.
So where along this path did you witness the lack of financial education in the country?
Yeah, I think it was in 2001 when I became the Assistant Secretary for Financial Institution at the Treasury Department. I started an Office of Financial Education there, which continues to provide a lot of leadership throughout the federal government. We started researching, my staff and I researching the availability of financial literacy resources, especially, at all grade levels, not just high school levels, and didn't find much of anything, frankly. And then we did some convenings with textbook publishers because I always thought, really, can't we get some financial education into the core curricula that's always already there at your math classes? There's so much math involved with managing money, and your English classes too. There's so much great literature about people who have had money problems, or the impact of money and money problems on families. And it's important to start early. Kids get money at an early age. They are interested in money at an early age. I know all the parents listening will understand that, and we need to seize that opportunity early on to start them in the right direction in terms of how to manage their money and keep it safe.
So that was the basis or the concept for the books you thought about it. You saw that people didn't have knowledge about it. They'd go to school, they'd get a job, and they'd have no idea how to manage their money. They'd save, they'd get a good credit score, how to avoid debt. These basic points, they didn't have knowledge. So
No.
why did you decide to write books?
Well, it ended up being a whole series of 8 books. They're called Money Tales, but they each deal with a discrete financial topic. It's a couple on compounding interest, how it helps when you save, hurts when you borrow. There's one on Ponzi schemes. There's one on speculation. There's one on understanding contracts called Princess Persephone Loses the Castle, that was inspired by the great financial crisis. So there's a whole series of them. And I wanted to write picture books because, one, my husband and I always read to our children when they were little. We read them picture books and they loved them. And we would read those books over and over again. If they liked the book, we'd probably read that book 100 times to them. Think about the other stuff. We were Aesop's Fables, Little Red Riding Hood, Grimm's Fairy Tales. All of them are stories we all share in common, but they all had lessons in common. I thought, why don't we do that for money? So my books they show financial perils usually, and then they always have a happy ending. The actors in the books understand their mistakes and learn by their mistakes, and they usually have a little moral at the end, the way Aesop's Fables did. I think I did kind of have Aesop's Fables in the back of my mind. And the other nice thing about picture books is parents read them with their children, and parents need financial education too. And I have heard from a lot of parents who learn from my books. Learn by reading my books to their children. And there's back matter in all the books that explain, the nonfiction educational texts that explain what's going on in the story, how this happens in the real world. And I think parents read that with their children too and really learn. It's a family learning experience.
Well, among the many things I like about these books are the characters. So let's start with Princess Persephone. Can you tell us about her?
Yeah, so she is always running into money trouble. So she's indulged by her father, the king. She lives on the Ganymede moon, an ice moon that orbits Jupiter. And her dad's always away, and when he leaves, she's always getting into money troubles. And she has a wise dragon named Spice, who frequently helps get her out of her money troubles. But there's one about, well, as I said, Princess Persephone loses the castle, where she falls prey to a sleazy aluminum siding salesman and loses the castle. There's one called Princess Persephone's Dragon Ride Stand, where she wants to go to Earth in the worst sort of way. Her dad tells her, no, it's too hot. She doesn't care. She's seen an ad on TV. She wants to take a vacation to Earth. So she works a little hard out with a dragon ride stand to earn the money to buy a spaceship to go to Earth. And then immediately, gets a sunburn and she's blistering hot and hurries right back. So that's about, that book has a lot going on in it in terms of starting a business and earning money, how hard it is to earn money and how easy it is just to spend it.
Right. Well, let me read what you write in Princess Persephone and the Money Wizard. You say, with extra money, they ran out and shopped in a spending spree that could not be stopped. Kids relate to the idea of wanting to buy whatever they want. I guess some adults do too.
Yeah, that's true. Well, impulse control, so many of the basic lessons we teach children about, look before you leap. Don't do something just because everybody else is. So many of those kinds of behaviors as adults are really destructive. How many times have we bought something on impulse without thinking about it? How many times have we bought something just because somebody else is buying it because it was fashionable? Those are the kinds of decision makings that can really get you into money trouble. But we teach them to children in other contexts. We just need to teach them children in a money context as well.
Mm-hmm. Well, at the end of the book, Princess Persephone and the Money Wizard, you write, she learned the laws of supply and demand. When they don't meet, an invisible hand will lead to something called price inflation. This made prices go right throughout her nation. Too much of a good thing can end badly, even with money, she found out, sadly. Now, this is a complicated idea that you're teaching children.
Well,
how do you go about
yeah,
figuring out what's the right level of complexity?
yeah.
Did you ever have a cut something out because it was too advanced?
Yeah, well, I did. My publisher wanted me to write a kids book about crypto,
Oh,
and I just couldn't. I mean, everything in crypto is taking place in a computer. It just there was no story to be had. But I did end up writing Daisy Bubble, which is about speculation, because crypto, one of the big dangers for young people, especially young men, is the enticement, to speculate in crypto to try to make big money when most of them lose big money. That was one that was just too complicated. But the book you just read from, Princess Persephone and the Money Wizards, that's basically about inflation. Just she wants her friends to go on a vacation with her and they don't have the money. So she just tells her money wizards, her central bankers with the printing press in the basement of the palace, to just print more money and give it to everybody so her friends can go on vacation with her. And of course, what happens is everybody's got more money to spend, but the supply side cannot catch up with this instant massive infusion of cash. So the prices just keep going up, and her friends still can't afford to pay for those expensive vacations, and everybody's paying a lot more. So inflation is not hard. I mean, I think we try to complicate a lot of these financial challenges into something that harder than what they really are. And yes, of course, there's a lot of nuances about money supply, and I will not pretend to be an expert central banker, but I do, having known Paul Volcker very well, as you did too. Yeah, money supply, excessive money supply will create inflation. And that's something basic people need to understand, because so frequently when government opens the money spigot, they're trying to help people. But when they do it, when they're just creating a lot more demand and there's no ability to increase the supply to meet that demand, you get inflation. And that's exactly what's been going the last several years. And finally, we're seeing its abatement. But that's not really that hard. And I read that book to third and fourth graders, and they get it. They understand inflation. They understand, toys are going up, have been going up, candy's been going up. Again, thank goodness that's starting to abate now, but kids get it.
so how about Billy and the borrowing blue-footed booby? Can you,
Right.
can you tell us about him and also the selling seal?
The selling seal is kind of your combination of an abusive banker who also sells things. So he sells things and finances them, right? And so Billy wants an umbrella. He's a little booby. He lives on the Galapagos, and he likes to take a nap in the afternoon, and it's always raining on him. So he wants an umbrella. So he goes to Selling Seal, and Selling Seal has a very expensive tin sardine. They use sardines for money there. Umbrella that he can't afford. So Seal offers to let him have it now, but it'll cost him double in a month. So it'll be 20 sardines in a month. So Billy takes the deal, and then he gets his 20 sardines and he goes back. But every time he starts to go back, he sees something else he wants to buy. And the seal keeps letting him buy the new stuff. And every month is bigger and bigger and doubling, because it's that compounding effect, right? It's doubling on the higher amount, the higher amount. So at the end, he ends up losing. Seal calls the cops on him, and he ends up losing all of the things he bought. But his much wiser sister, twin sister Bess, tells him that not to worry. She takes him to a responsible shopkeeper who sells him a umbrella for 5 sardines, which he can afford. And then the book concludes, from then on, he lived by this rule, even though it sounds nerdy: never borrow to buy dumb stuff and live a happy birdie. And isn't that true for everybody? So
No.
never borrow to buy dumb stuff, and just don't buy dumb stuff. And certainly don't buy it on impulse or because your friends have it, which is exactly what he was doing.
You mentioned that the currency was on the island was sardines.
Sardines, yeah.
There are a lot of references in your books about sardines. Do you like sardines?
Well, actually, I do like sardines. Mustard on toast, you bet. They're delicious. But I was just trying to think of something that would be plentiful that animals on the Galapagos might use as, for money, as an exchange mechanism.
Mm-hmm.
And I settled on sardines. So it wasn't anything more complicated than that. I didn't think they would be carrying around dollar bills, but sardines were something they could catch on their own.
There's more of my conversation with Sheila Bair.
She and her husband had read Shark Scam, which is about Ponzi schemes, to their children and realized in reading the book that they were in a Ponzi scheme.
That's coming up next. Plus, Robert Samuel of Same Old Line Dudes.
If I can bring happiness to them by just doing a simple deed as staying in one spot for X hours, that brings me pleasure. And when they get pleasure from me doing something for them, it's like a two-way street.
You're listening to American Voices. I'm Bill Bradley. Stay with us. I'm Bill Bradley. We're back now on American Voices. We're continuing my conversation with Sheila Bair. She's a former head of the FDIC, the Federal Deposit Insurance Corporation, and she was an assistant secretary for financial institutions at the Treasury Department. She's written 8 books for kids, picture books, teaching them important lessons about money. So Sheila, what about the editing process? I mean, you write things, but you're not writing things for, you're writing to try to make it clear enough to a young person, a child.
Right.
So, let's take Shark Scam.
Okay.
When Arlene the tortoise falls for the shark scam, Whitney the shark says about Arlene, "What a dummy." Now, if you were writing a financial book for adults, you might not be able to use the word dummy. Does writing for kids liberate you in some way?
You can have a little more license. I try to talk like kids talk, and so you can have a lot of fun with the wordplay. Now, I have to be careful not to use overly complicated words, and I love wordplay. And my editor has sometimes had to call me out on using words that are probably bigger than they should be for this is grades 2 to 5 is the primary market for these books.
Right.
But even 4th and 5th graders have a pretty well developed vocabulary, and kids love wordplay. I love wordplay. The rhymes are fun. So it is. It's a lot of fun. That's part of the joy of writing the book.
Well, about the rhymes. In college you wrote poetry, right?
I did write poetry in college. Yes.
Do you feel that writing these books, you were kind of getting back in touch with that poetic side of you that politics and finance had not allowed to flourish?
Yeah, I think that's probably true. That was what I first and foremost, I just wanted to get some good quality content out there that kids would enjoy reading that wasn't didactic but fun. But yeah, it was selfishly, yes, I did. I thought, well, this would be a good creative output. I've always enjoyed fiction. I've always enjoyed poetry and rhyming verse, and this will be a fun way to use those parts of my artistic abilities.
And now that you've done them, are there more things like this that you want to do?
There's no end of financial subjects that can help kids understand how to manage their money and keep it safe. My next project, though, is a book for teenagers called How Not to Lose $1 Million. And that's a nonfiction text written for the high school age population. The premise of the book is to help people understand how you can lose money unnecessarily. For instance, credit card interest, curing credit card balances, paying unnecessary bank fees, trying to speculate in the stock market, trying to speculate in any market. Impulse buying. And there's also a chapter on scams and cyber scams in particular. So there's so many ways you can lose money unnecessarily, and every penny that you lose is a penny that you can either spend on something that's worthwhile to you, meaningful to you, and hopefully part of it is money that you could have put into an investment account, which over the long term, 500's up, averaged over 50 years about 12.5%. That ain't bad.
So, no. I saw a statistic recently. If you put $10,000 in an S&P 500 fund in 1970, today it'd be 1.8 million.
Yeah, it's amazing. I think about those thousands I lost on credit card interest back when I was 24 years old.
Great. I can't wait to read it. But, when you've written the book, but you also read the book to kids sometimes.
Right,
how do they respond?
It's just a joy. I know I have them because the classrooms are always completely quiet when I'm reading the book. And then when I stop and I start asking questions, a million hands go up. It's hard to manage the conversation because they all have opinions about what was going on. I read Billy the Borrowing Who Put a Booby. And actually, this was before I read the book. I was just started talking a little bit about debt. And so I looked at the crowd. I believe they were second graders. And I said, who can tell me what a loan is? And a little hand went up. And this little girl said, I know. And I said, yes. And she said, it's when you're by yourself. Okay. So now I ask, who understands what debt is? I don't say a loan. But it's just they're just funny, and they enjoy the books, and they all have stories. Oh my gosh, even 8 and 9-year-olds. A common question I ask is, how many of you have bought something you wish you hadn't bought? And every single hand goes up. Roblox, this game site for little kids where you can buy stuff, that frequently comes up. Usually it's online, something they bought online or something that some friend had that they ended up not really wanting. So there's a lot of buyer's remorse even at that early age. As I say, parents don't understand these kids are ripe for financial education at a very early age. And you may pick up some things too by reading to them. And
by all means. In these readings, have there been any people you've met who moved you?
Yes, there have been times where a child will raise their hand. On more than one occasion, I've heard about parents stealing money from their children, or older siblings stealing money from their children. There are some sad stories and some children that are getting very negative early experiences with money. So that is troubling, and just trying to reach out to parents too through these books and otherwise to help them understand that their financial behavior influencing and impacting their children, respecting their money they burn, respecting their money, helping them keep their money safe, putting it in a bank account. Those are really the kinds of things parents should be doing with their children.
And you've heard something about a Ponzi scheme at one point?
Yes. Well, that was actually, I did a podcast with an interviewer who really liked the books. And then the interviewer for the show heard a listener that she and her husband had read Shark Scam, which is about Ponzi schemes, to their children, and realized in reading the book that they were in a Ponzi scheme. So they immediately got in touch with their lawyer, and the lawyer, they did lose some money, but not nearly as much as they might have. The lawyer extricated them from most of it. So, but yeah, I mean, that was that really made me feel good. It was a very tangible example of how the lessons in my books being shared with the parents also help the parents.
Well, I can't wait to read How Not to Lose $1 Million.
You will get a signed complimentary copy, first edition, I promise.
Great. Well, Sheila, thanks a lot for being here on American Voices, and thank you for teaching kids these really invaluable lessons. I mean, they'll grow up, they'll get jobs, they'll know how to manage the budget, how to save, how to avoid debt. You're really giving them an opportunity to succeed. Really, that's what it's all about.
Well, thank you, Bill. And let me return the favor by complimenting you for the wonderful role model you have served for young people, both in sports and in government and statesmanship. That's been inspirational to young people as well, and performed a vital service. So thank you for being the outstanding person you've been your entire life.
Well, there we are. Two friends saying
there you go.
How good the other friend is.
And sincerely so.
Okay. Thanks so much, Sheila.
Thank you, Bill.
I've been speaking with Sheila Bair. She's the former head of the FDIC. She's written picture books for kids, teaching them about money. Titles include Shark Scam, Daisy Bubble, Rock Brock Saving Shock, and Princess Persephone and the Money Wizards. Thank you for listening to American Voices here on my YouTube channel. For more interviews celebrating the goodness and creativity of the American people, click the subscribe button below.